Hello insiders and welcome back. Even though most of my content on this channel is about day trading, today I want to talk about PFE Pfizer's stock. And the reason is, as I grow my day trading account, which is in my Roth IRA, I often think about what should I do with that capital sitting around. And one of the things you can obviously do is buy dividend stock, something you don't have to worry about too much, or in theory, that should be the case. One of those popular dividend stocks, because the fat dividend it pays out, 6.31%, is, after all, Pfizer, regardless of how controversial the ticker is. And especially right now, after there was a high of 61.71 and a few months later, we pulled back 55%. So I think right now, if there ever was a time to consider Pfizer, it might be it. So that's why in this video, first of all, we're going to cover, is the dividend safe? Then we're going to look at what a 20-year-old position might look like. So if you bought it in 2004, we're also going to compare that against the SPY and the NASDAQ. I'm going to actually show you guys my Pfizer position because yes, I did buy it a little bit. And something a little bit less relevant to me because I'm trading my IRA, there is a need to know tax potential problem before buying Pfizer, especially around the dividend. Let's quickly get a bird's eye overview of Pfizer. So here you see that dividend estimate at 631%. It has a pretty big market cap of 152 billion, no joke there. And the PE is relatively high, but I'll show you guys some more comps in a little bit, and has a very, very low short float. Some of the tickers we're trading are like 30-40% short float. It almost feels weird to me seeing a short float that low. And here you see it, the performance of recent have been pretty unexciting for this ticker. And I think that's why it makes it somewhat interesting to go for its dividends. But are they really safe? Or is it going to get canceled? So let's see here what Pfizer has to say about that. This is on Pfizer.com news press release, and this one came out December 14th, 2023. So about 2.5, almost 3 months ago. Well, actually, yeah, a little over 3 months ago. And they don't hesitate to mention here the first quarter 2024 cash dividend will be the 341st consecutive quarterly dividend paid by Pfizer. And I think that is something that we often forget about. This is a fairly old company, and they do prize themselves on paying the dividends. And if you scroll down further, they do mention, for more than 170 years, we have worked to make a difference for all those who rely on us. So they talk about how long they've been paying dividends, how long they've been around for, quite often. Yahoo Finance has an article here. Shareholders will receive a bigger dividend than last year, but they do mention some concerns I wanted to show you guys. Even over a long history of paying dividends, the company's distributions have been remarkably stable. The annual payment during the last 10 years was $0.96. It's actually gone up quite a bit since then. This is after all the average. And the most recent fiscal year payment was $1.64, which is pretty nice. This implies the company grew its distribution at a yearly rate of 5.5% year over year for that time period. Now, something that is less favorable is right here. Initial appearance might be deceiving. Earnings per share have been shrinking by 14% over the last 5 years. So your principal, what you bought the stock for, is going down, but you are making dividend incomes. And they also go ahead and talk about that the dividend could become unreliable, but they don't really mention any specifics. Coming to Simply Wall Street, they have a nice little risk reward analysis, and they believe the price of Pfizer is actually trading 60% below their fair estimates, and they are looking to grow quite a bit. So I would say that is a very nice bullish case. Now, some of the problems is right here, where the debt is not well covered by operating cash flow. It's actually not that bad. They did take on a lot of new debt recently to do some acquisitions, but that big dividend needs to make sure it has really good cash flow. So that's something that a lot of people are eyeing and are getting a little bit worried about, and that's exactly why the stock price, or one of the many reasons the stock price is down, not to mention because of that huge rally from COVID and those COVID sales now going down as well. And the profit margins are slightly lower, which is still not that big of a surprise since COVID was a really good thing for Pfizer. Scrolling down here, the share price versus fair value, you can see this is the 60% undervalued that they think that Pfizer is, and that is based on the discounted cash flow model, which is like the first thing anybody learns as a finance grad. DCF is the standard way still to price companies, although I really don't think it's so relevant. I think companies go up and down based on human emotions, but I might be a little bit biased because I do trade top gainers, so everything we trade is just pure emotion based, and there's usually no fundamentals behind it. Large caps are a little bit different, obviously, and it is good to see that there is potential upside based on DCF. Moving forward to the DCF model, one thing I really wanted to highlight here is the PE ratio that we were talking about earlier. And I did mention it has a pretty high PE ratio of 71.9. That is above the peer average. Although look at this, Eli Lilly, which is just absurd. It just had a huge run, is at 132 PE, which is pretty crazy, but just shows Lilly, which had one of the most insane runs. Actually, I just have to go over to this ticker symbol really quick. Look at the Lilly, LLY ticker symbol. This is a weekly chart and it's just gone exponential. So that was 10x right around the 500 mark, and now is at roughly 17x. So this one is absolutely crazy, LLY. And a ticker that's that extended is at 132 PE, while Pfizer's at 72, which is pretty crazy. So this makes me a little bit uncomfortable for sure. Going down a little bit more, revenue expenses breakdown. So they did walk away with some profits, but ultimately they have to cover that fat 6% dividend. And that's what has people nervous. Checking out their financial position, they do have that increased liabilities. This was closer to about 40 billion before they started doing some acquisitions. So their liabilities have gone up, but I do think they have a lot of assets, and they do put a lot of money coming back up again into research and development. So if they ever did have a really tough time, they could probably cut a lot of the costs just to get by for a little bit. So I don't really see them cutting that dividend, because if they did cut the dividend, I think their stock price would really, really tank. Now, one more pro I do want to point out here is the ownership and the insider trading volume right here. In the last few months, there hasn't been selling, but there has been buying. And one thing traders and investors often say is people sell for many reasons, right? Maybe they need to liquidate a little bit, maybe they need to pay for that new house, etc. But people only buy for one reason, and that's because they believe the stock price is going up. So I love when I see insider buying if I want to be long a ticker. So that gives me a little bit of confidence, but it is a pretty small amount, 3,000 shares. It's probably nothing to write home about. So is the dividend safe? I would probably lean to more of a yes. The company really makes it a focal point of their history of paying out dividends, and I don't think they want to break that consecutive streak. And I think they would do a lot of other things as well before they broke that streak, and they do have a lot of cash on hand that can keep them paying that dividend for, I would say, at least a few years going forward before they have any major problems. Now, let me quickly show you guys what a 20-year-old position would look like and show you guys some comparables to the SPY and the NASDAQ. I found this a little crazy. So if we bought Pfizer, ticker symbol PFE, with $1,000 about 20 years ago, a little over 20 years ago, this would be our final value, $1,700, which is not really great. It's less than 3% annual return year over year, which barely keeps up with inflation, and that has me pretty worried being a long-term investor in Pfizer. But again, it did have that huge sell-off recently, so maybe it is a good time to buy, because at the tip right here, your investment would have been well over 3,000, 3.5, even more. So that's not too bad. But definitely still no Tesla, but that's kind of what you expect from a value/dividend play. What's even more scary though is if you don't count the dividends, which you obviously can't do for a ticker like this, just showing the start price and the end price. The return on just owning the SPY, which you also get dividends from, or the NASDAQ, you can see the huge total return there. So Pfizer, you're just slightly below break even, while the SPY gives you 500% return over 20 years, and NASDAQ is giving you well over 1,000% return over 20 years. My big problem is that this is a pretty unattractive company long term. So why did I actually end up buying Pfizer? Let's go ahead and talk about that. And I'll show you guys my transactions, my initial transactions here at 116, where I accumulated 1,000 shares of Pfizer around mid $28. And I'll share in a second that need to know tax potential problem before buying, especially buying around the dividend. So let's go to PFE. And we are on the weekly chart. Let me go to the daily chart to get a little bit more accurate. And let's see where I bought Pfizer. So let me go say show orders and show trades, apply. And here it is. I did a little bit of managing another swing trade right here in this area, and then I re-entered a little bit lower. And now we've been in that consolidation phase for quite some time. So what I'm looking for is to have this support area hold. We might have a retest around 25, but I do think there is that chance that we break out of this channel as we've started consolidating near the lows. And oftentimes you do get a little bit of a retest. So we might have a retest around 30 or 31 or 32. These are all zones that I would probably look to take some profit off the table, and I'm totally fine holding for quite some time to get to those zones. I don't need the capital and it's just sitting in my account, and that would be about a 17% move to the upside, probably closer to like 15%. And for me, where I entered, it would actually be a little bit less, around a 10% move. So for me, the valuable part is collecting those 6% dividends, annual dividends. That's really where the money's at in this ticker, and I think overall it is a fairly safe place to put your cash. Again, this is an IRA account, so I don't pay taxes on the dividends. Otherwise, I actually would have bought here, and even though I haven't sold and the price is going down, I would be liable for this dividend right here. So there is a scenario where you might want to buy a dividend stock, but your price goes down, you don't plan on selling it, and you're going to be liable for paying taxes even though you haven't sold a position or you don't even plan on selling the position. And you might even be wondering, Alex, where is your dividend payment in TD Ameritrade? I don't see it. So this is another thing I did want to share. I bought on the 16th, and if you go to TD Ameritrade and check out the stock profile, you can see that on the 25th, there was that dividend payment of 42 cents, and times that by 4 because it's quarterly, right? For a 12.16, that's how you get to that 6%, or $1.60, $1.70 a share. I owned it before the ex-dividend date, and it was recorded on the 26th. But as long as you own before the 25th, so if I bought on the 24th, even extended hours, I would be getting that dividend payment. And the reason there is no dividend transactions popping up for Pfizer is because the actual payout date is March 1st, so that will be popping up in hopefully 3 days, which I have 1,000 shares, so 1,000 times $1.42 is $420. Which unfortunately, coming to my day trading screen, won't put me into the green, but with every dividend payment every quarter, any rally in Pfizer price will just get that much more beneficial. So if I hold for a year and then it goes up this 10% from roughly my entry, I wouldn't be up 10%, I would be up roughly 16%. So let's see what happens. If you want to learn more about my trading, definitely follow me on Twitter, Mr. Alex Winkler, and check out my trade journal portfolio, tradejournal.co/Winkler, where you can follow my portfolio and even get notified every time I enter and exit a trade. Our goal is $1 million between my day trading and swing trading portfolios. Most of my income is all from my day trading portfolio. If you want to learn more about my actual day trading strategies, I'd highly recommend checking out the videos I'm linking above. Thanks for tuning in, everyone, and dropping that like. See you next time.